Hey, what's up, fam? Let's talk about the market and what's going on today. Bitcoin looks like it is on its way back over 91,000. But the real story is not even about the price pump. It's why it's happening, and almost nobody is even really talking about what's really going on. Yesterday, the Federal Reserve quietly injected $13.5 billion into the banking system, the biggest one-day liquidity boost since 2020. And it happened on the exact same day that QT, quantitative tightening, officially ended. Listen, this is not normal. Here's what that really means in plain English. Listen, folks. Banks lend to each other overnight. When everything's calm, the market runs smooth. But last night, a lot of banks suddenly needed cash all at the same time. That's a classic sign of funding stress. The plumbing of the system is starting to clog. The last time we saw this pattern was 2019, when the repo market completely blew up. And then in early 2020, right before the massive COVID money printing wave. Now, both times, the Fed stepped in hard to stop the stress from spreading. The same thing is happening again. A $13.5 billion injection is the Fed saying, we don't want this problem leaking into stocks, bonds, and everything else. So no, this is not a full-blown banking crisis. It's tight liquidity. And the Fed is now reacting fast. Listen, folks, QT is over. They have stopped draining the system, and they've started adding liquidity again. Now's the time to pay attention. It is officially QE yet? Not quite. Quantitative easing. It's almost here, though. This is the first move that the Fed always makes before flipping towards easing, and that is why this matters for your money. When liquidity is removed, risk assets bleed. When liquidity is added, markets stabilize and begin to pump. This move tells us that the Fed is watching stress in the system. They're willing to step in when liquidity tightens. We're no longer in pure tightening mode, and conditions are drifting from tight towards neutral and then eventually to easing. When easing happens, it's going to be game over. Now, what does this mean for crypto? Short-term volatility is where it's going to be. Until we get QE, this short-term volatility is going to be insane. But medium term, this is very bullish. So number one, QT has ended. They've stopped sucking out liquidity. Number two, emergency injections like this usually don't happen just once. And number three, when liquidity injections and rate cuts finally line up, which they will, crypto has historically exploded. We ain't seen nothing yet. That's why Bitcoin is reacting instantly. Liquidity is the fuel, and the fuel is starting to flow again. Hang tight, folks. Hold on.